Hey everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. It's time for the market recap. And if you're interested in any of the services I provide, please check out the links in the description below for both the Patreon and Discord. Okay guys, what a day. So this was a big day for the general markets, and if you were in the Lemon Garden Discord, you know we were busy today. We had a bunch of trades we closed in profit, so many longs in crypto we were closing, we were opening up shorts, we were doing so many different trades. So it was such a wonderful day. It's one of the best days of the year so far. So if you're not in that Discord, join the Discord. It's free currently. Just get on in there. We have free trades, free live streams for everyone. You don't even have to be a premium member, and you're gonna get your time's worth. I can promise you that. Now, the news that dropped today was the CPI numbers, and surprisingly, it hit forecast. Did not really surprise. However, we are getting signs that, at least right now, that we may have topping inflation. However, considering what's been going on with the banks, that may be short-lived if the Fed decides to start easing back on raising rates as aggressively as they have been. Okay, so if that happens, look for inflation to rise higher, even though this CPI report was showing signs that CPI may have topped out. Okay, so we can't jump the gun. We can't go, and as the old saying says, we can't put the cart before the horse. We have to kind of see what next month brings, because next month's CPI report is gonna have the data that we have now in regards to what's going on with the banks, and pretty much seeing how this is going to spread throughout the markets here in the States. So we gotta stay patient, we gotta stay vigilant, and we gotta stay nimble, so whatever happens, we're prepared for it. Okay, so let's hop into the charts, see what's going on. So starting off with the dollar. So the dollar's been playing out pretty much as expected. Overall, we did deny the lower end of this bearish monthly fair value gap. Had a nice, 3-candle surge to the downside. Yesterday was a nice little resting period, nice little doji, and we actually opened up this daily candle with a slight gap up. So this is to be expected. We may get a little sell-off down to fill that gap, but I would be looking for some short-term upside, really minor upside. So if you take a look at the lower time frames, like the 30-minute or the 1 hour or the 1 hour, we'll start with the 30-minute. You can actually see this grinding structure to the downside, and if your eye can see it, you see it kind of tightening out. That's usually a sign to let you know that it has a bullish bias, this structure. Okay, it has a bullish bias, and it is slowly being accumulated, the dollar, to bring it up and probably attack the imbalance right here. So we could see in the short term a nice little pop up in the dollar sometime tomorrow, going back towards 104.23, and potentially even coming to fill this gap on the 30-minute, going all the way up towards like 104.6263. Okay, so look for short-term upside on the dollar, but overall it's very likely in that upside that we'll see on the daily that we'll get a little grind up and then continuation down back towards that daily bullish fair value gap, back towards that ascending trend line. So the overall path is still following our projection, but we are looking for very minor short-term upside in the dollar, as we have come down pretty hard. Now, if we don't get that upside, just look for a continuation down going into this level, and it's still very likely to hold this general zone, even if we just were to just sell down from here. Okay, so either way, we have a generally good idea of where we can look for the dollar to get to before we get a major pivot to the other side. Okay, so we'll continue to watch, let the dollar kind of play out and mature, what the price action showing. Let that mature, and then we'll get a better idea of where we're going to get to the upside if we do make a lower pivot down here. Okay, so overall, I'm liking what I'm seeing from the dollar. Now let's get on to the US indexes. Let's check out the Dow, the S&P, and NASDAQ. So Dow came into these fair value gaps. I have been circling this. This was the general target area. We came towards the top side. I do think generally we could end up coming lower, but coming into here, grabbing the liquidity in these fair value gaps under this pivot does mean that we're likely going to get a little bit more of a bounce like we have seen. So look for a slight continuation, but if the dollar does weaken out, strengthen slightly, then you may see the Dow kind of pull back a little bit. But I have been noticing the inverse relationship between the dollar and the general markets has not been as strong. So even if the dollar does go up, you may still see some slight upside for the Dow anyway. So the general resistance zone I would be looking for is that 32,400, 32,500, and then that's when you probably want to see a bit of a rejection, a bit of a continuation down, and then we may get that kind of tightening structure once more if these levels are going to hold. And that's what we generally want to see if we're trying to see a continued uptrend from these lows down here, right? So you want to see that higher low structure really get built out down here if that's what's going to play out, if you're bullish. Okay, so overall, again, loving what I'm seeing. It's all playing out generally how we've been projecting it. Next is the S&P. Very similar. Instead of holding the fair value gaps, it's holding this descending trend line, this breakout trend line. It is the trend line from the all-time high. Broke out pretty much early in the year and then came back and now is holding the zone. So we'll see if we can actually get that to continue to hold and then get some continuation going towards 3950, 4000, and potentially retracing back from the 4Ks, the 3950s, back down towards 3900 and really get a nice bullish consolidation for continuation. Again, not confirmed, we're just mapping out what may be, but if we do this and we kind of, play out every possible scenario, whatever comes our way, we won't be surprised. And that's what's really kept us on the ball, kept us locked in. At least that's what I believe, and that's what's kept us being so successful pretty much since all of last year to now, right? So we're going to keep sticking with this plan, mapping out as much as we can. That way, whatever comes our way, we'll have a generally good idea to deal with it and really react and be ready to make as much profits as we can in that scenario. So as of right now, this is implying more upside, but look for a potential drawback if we do get that strengthening in the dollar. And again, it'll be more like a short-term bottoming structure that will probably lead to more upside going towards that 3950 to 4000 zone. All right, next is the NASDAQ. So NASDAQ, I would say, is actually in a fairly bullish structure, especially when compared to its compatriots like the Dow and the S&P. You can see it's in this descending structure, almost a flag. Okay, this is pretty much a flag structure. So this is really bullish, and this kind of makes me think that the risk on mentality for the markets is definitely trying to be reintroduced, right? So you're getting a lot of the tech boom that happened here. You're seeing what looks like a bullish consolidation to have a continuation. So the markets might be trying to price in the Fed being far more liberal in how they go about raising rates, if they even raise rates at all after this next round. Okay, so the markets could be pricing in potential easing by the end of the year or early next year. So be ready. The markets are really starting to try and fuel up and get bullish. They really, really are. So this price action here is really, really bullish in my opinion, but we could still see that pullback back to maybe tap this bullish fair value gap down here, as it has not taken the liquidity out. But again, if the Dow and S&P want to take that step to go up higher, the NASDAQ will follow. All right, now let's take a quick look at oil. So oil actually had a bit of a sell-off today. And in my opinion, I like to see it. I do think oil, like I've been saying, is still extremely bullish when you look at it from a monthly time frame. Let's actually take it off log real quick, and let's actually get rid of all these drawings so it's a little bit clearer. So if you can see what I'm seeing here, I hopefully you can understand why I'm so bullish. You'll see these top pivots up here, here, and here. Now just draw a line with your eyes, and you see that we broke out really hard from this massive rally when the futures of oil really had that issue where it went down to pretty much like zero or like a penny a barrel. Since then, we've rallied up, breaking the monthly downtrend trend line, and now us pulling back is actually pulling back to that trend line or the general zone, which is around 60 bucks. That's why I've been saying, even if we do pull back on the daily, weekly, monthly, all the way down to 60 bucks, it's really not that big a deal. When you look at it on the macro, you still have to be bullish on this. You really do. The only time you can start looking at, okay, maybe it's not bullish anymore, is when we start taking out 40 bucks. So we're so far away that I just can't help but be majorly bullish on oil. And then when you look at the monthly and weekly, I mean, it's clear as day that after that absolutely historic rise, like this makes sense that you would have a year or two, maybe even 3 years of a pullback on oil if you're going to have a overall bullish decade on oil. So I'm still really bullish on oil, but we may see that continuation down as we finally look like we're showing signs of breaking out of this triangle, going down towards the 60 bucks, coming back down towards this descending trend line. But once we're there, I'm gonna put the alert out again. Watch out, watch out. The oil chart is frightening when you think about the cost of living, okay? This is the most important chart when you take into account the cost of living for the everyday person. Higher oil prices means higher food prices, higher transportation prices, okay? So though we may get a pullback here, it's also off of a weaker dollar, so we may not see the prices coming down, inflation still going up, so we won't get the benefit of cheaper products. But once this starts going up, and I mean going up seriously, we're going to unfortunately get the negatives of more increases in price on top of the inflation and on top of the weakening dollar. So this is a very frightening chart. It's going to have a slight reprieve, it looks like, but once we get towards these major zones, especially towards like 60 bucks, taking out the low down here, taking that liquidity, be on the lookout for a major accumulation down here that will likely last some months, and then eventually will lead to major upside, potentially the macro bullish continuation going towards the 90s, hundreds, and maybe even higher. Okay, all right, now let's take a quick look at gold. So gold, oh man, I mean it's playing out. I mean, it's crazy how this is playing out. If you watch the last recap, I had mentioned one of my members who's in the day trading room with me, trying to get funded, they actually took on some shorts here. Now they had some different orders, by the time we met up this morning, but overall still very, very bullish, still very much in the money. And so far it looks like their short on oil has been playing out pretty well. So if you are interested in day trading with me, make sure to check out that link to the Patreon or to the Discord. You'll get the information there. We day trade Forex, commodities, we'll even day trade crypto. And if you want to become a funded trader, that's the place to do it. I'll get you through, I can promise you that. And so far it's been playing out as expected, so look for that continuation pullback going towards 1890, and then potentially if we do have continuation beyond that, you're looking towards a move back towards this gap around like 1870. So gold is showing serious signs, especially if the dollar is going to have a slight increase in strength, of having a nice decent pullback, which would make sense because it's had a really impressive rally. So it pulling back here is very natural, very normal, may take a couple days, but look for that pullback going to 1890 at the least, and then potentially down towards 1870. Next is silver. So silver, again, beautiful rally, also showing signs of slowing down. Again, looking for that pullback back towards 21.3, and if we get a really deep retracement, which this is quite unlikely, at least within this week, a move back towards 20.75. Again, we can get that if gold has a deep retracement, the dollar kind of strengthens fairly quickly. You may get a retracement back to that level, but overall, look for this low to hold, just like on gold, and watch for a larger, bottoming structure, short-term bottoming structure to build, and then a potential move back towards, 2250 to maybe even 23 on silver. All right, now let's get on to Bitcoin. So, man, what a day on Bitcoin. What a day in crypto in general. Crypto's been absolutely fabulous. So if you're part of the Discord, you probably saw me close the trade. If you remember, you were in the trade with me. What a monster trade we had. We actually opened up a long at 20,350, so right at the turning point. Absolutely incredible entry, I would say. And then we just rode this thing up and literally closed it right near the top of the wick. Really just closed it around like 26,300, 26,200, around that zone. And then we just watched it drop. And I even had some members actually flip short. I was actually interested in flipping short as well, but I was too slow to pull the trigger. But some members during our live stream, because we do live stream almost every day, as we were talking about, decided to pull the trigger, and a lot of them got in around 26,200, and also they got into Ethereum at 1770, so 1,770. I also was going to go short there, but of course I didn't pull the trigger, and that's been a running joke of late in the Discord, where I'll call out a lot of trades I don't end up taking because I get a little too greedy on my entries. But the members, I'm very proud to say that they do trust some of the things I say, and they just hop in, and so far it's been going pretty well. As long as they have good risk management, that's all I want. But overall, I mean, the trades in the Lemon Garden have been absolutely killer, especially on the crypto side of things. And after we closed out this long, it's about 30% gainer, 29% gainer. I just really went to work closing out a ton of longs. We closed out XLM, Polkadot, Uniswap, Ethereum Classic, Doge. There were so many longs we closed out on top of the Bitcoin long today because the profits just came barreling in as we had this massive continuation. And it was very easy for me to close out this trade because look how little time it's spent down here grabbing the liquidity and then zooming higher. See, that's what you don't want to see if you want prolonged upside. Okay, you don't want to see that. So, I will tell you, if you're a newer trader, do not get married to positions, especially when they have very, very low times of consolidation in major levels, because they'll have nice upside, like a low V bottom like we see here, but the actual continuation, the stability of that move is very unlikely to hold because you didn't build up enough fuel down here to then get that sustained rally. So if we were gonna have a sustained rally with a move like this, you would want to see a trade down here grabbing the liquidity, grabbing the stop losses, really just butchering over leveraged longs and shorts and a consolidation and then leading to upside. But when you get something like this, obviously you're punishing over leveraged shorts, but you're also trapping over leveraged longs. So you have to make sure you get out of this stuff. If you find yourself in a wonderful entry like we did, do not get greedy. It's a similar story over here, right? Very little consolidation, rally up higher, and it took out the highs here and then immediately pulled back. What did we do here? Took out the highs here, and it looks like we're getting close to pulling back. So you don't want to get greedy. Take the profits as it comes. And we've been doing that in the Lemon Garden really since the start of last year. And that's why we've only had one trade that's lost in crypto, which was the Luna fiasco. And we've only had one loss in stocks because it was a penny stock. So we only lost 2 trades till now. So, and this is the crux of it, is not getting greedy and playing the levels. Play the levels, okay? So now what I'm looking for in Bitcoin is after we filled out this bearish daily fair value gap, so we can actually get rid of this fair value gap, we've broken through this major level. We're going to keep this on the chart. It will play a role. We want to watch this pull back all the way to 22,500. Then you're probably going to get a slight bump up once more and then look for continuation lower, going back down towards 21,500. Once we do that, I would be watching the price action to see what kind of price action are we getting. What is the sentiment? What is the context? Are we getting a bullish consolidation? Is it going to have a bearish bias? If it has a bearish bias, obviously the target level is going to be this low here, coming into this major monthly level that we want to watch to see if it can hold, okay? If we do have a bullish bias, look for, at least ideally, a pullback and finally potentially making a higher low from this low and then looking for a move up over a slow period of time. That's what you would ideally want. Now, I will tell you, the higher probabilities right now are that we have a retracement to come back towards this low down here, about 20,500, and threatening this wick low down here at 19,500. That is the more likely path over the next coming weeks to a month or so, okay? We do not want to ignore the monthly candle. We do not want to ignore the monthly structure. Let me show you what I'm talking about. So you had this massive run, okay? massive run here on the monthly candle in January, okay? Then February, you have a doji. This is a doji candle. Again, indecision, slowing of momentum, and now we got a push in momentum today, okay? We're attempting to push through. We did take out the high of last month, but if we cannot close above this high in February, which is 25,262.85, watch for a slight rise going into next month, something like this, and then a pullback, okay? I'm telling you, it's a very common structure when you're trying to build out a larger bottoming structure. You'll start building out what's called an Adam and Eve double bottom, or a swing failure pattern when you take out the slight lows here, and then after taking out that liquidity, you pop up again. Okay, so if we do not close above last month's high in this monthly candle, watch for next month, so watch for April, to have in the early days probably a slight move up, maybe even, seriously, maybe even taking out this month's high and then pulling back again, you're going to get this rising, grinding structure on the monthly that will eventually lead to another breakdown to make a double bottom structure most likely. Okay, so even if you're not a member or premium member, you just got my longer term structure, okay, of what I'm looking for. And if that is happening, know that I'm going to be trying to build out a long in that structure. Okay, as we come lower, I would want to build out a long in that structure. However, the time frame of that long would be much longer. I would have 3 to 6 months in mind if I'm building out that long. So keep that in mind. Okay, again, if you want to follow my services, especially the swing trade service, it is a real swing trade service. Some trades will last 1 day, some will last a year. Okay, so if you want to join the service, make sure that you do your due diligence. Make sure to talk to people in the Discord who are in the service. Ask me questions. I'm always open to questions. And then also read the Patreon, what I've posted there, and also what's in the Discord. And I also do free swing trades for everyone in the Discord. 1 free swing trade in both stocks and crypto pretty much a month. That way you get an idea of what the swing trades are like. And if they're to your fancy, you can then join the services. Okay, so that's it. That's all I have to say in regards to what's going on in the market so far. Hopefully you've enjoyed this video. Hopefully it's been very clear and I haven't talked too fast or rambled on. Again, if you have any questions, leave a comment in the YouTube video here. Definitely give me a like and subscribe. I do appreciate that. I'd like to know I'm doing a good job. And if you feel like this is good content, maybe share it around. Hopefully other people will find value in it. Okay. All right, everyone. Remember, be patient, be vigilant, and be nimble. I love you guys. Take care. Bye.